Hi guys, today we're gonna learn the basics of trading a stock. This time we're gonna learn about knowing your orders. So, who knows about orders, guys? So in this article, we'll cover the basic types of stock orders and how they complement your investing styles, guys. Living orders. So, the key takeaways you're supposed to get from this article is depending on your investing style. Different types of orders can be used to trade stocks more efficiently. A market order simply buys or sells shares at the prevailing market price until the order is filled. A limit order specifies a certain price at which the order must be filled, although there is no guarantee that some or all of the order will trade if the limit is set too high or low. Stop orders, a type of market order, are triggered when a stock moves above or below a certain level. They are often used as a way to ensure against larger losses or to lock in profits. So market order versus limit order. The difference, the two major types of order that every investor should know are the market order and limit order. Who got that, guys? You guys understood everything? A market order is the most basic type of trade. It is an order to buy or sell immediately at the current price. So if I trade right now, that is market order because I'm during market hours. Oh, that's why it's called market order, right? What if it's wrong? And then, so typically, if you're going to buy a stock, then you will pay a price at or near the posted ask. If you're going to sell a stock, you will receive a price at or near the posted bid. So you bid the stock and you ask to buy the stock. Hi, call me Dust. Hi, Dust. Market is the best you can take if the stock is moving fast. But it doesn't move that fast unless... I feel like ever since I've traded coin, I always think that the market doesn't move as fast as I've seen. You know how like coin market, they go up like 50, 60, 70%? I don't think I've ever seen that in here. Unless it was like 뭐냐? 저기 GameStop. One important thing to remember is that the last traded price is not necessarily the price at which the market order will be executed. In fast-moving or volatile market, the price at which you actually execute or fill the trade can deviate from the last traded price. The price will remain the same only when the bid/ask price is exactly at the last traded price. So if I have my market order at $10.49 and it's been asked and it's at $10.39 right now, then I won't buy. Sometimes there is high velocity trading and you can only get it with the market. So then 지정가 매매, 그게 limit order 거죠. Market order go inside straight away in the queue in the current price before the limit order. So market first, then limit. You need to learn what a circuit breaker is? That's a thing? Important, guys. Peppoji, important. So market order do not guarantee a price, but they do guarantee the order immediate execution. So you may not get the price that you wanted until later, but yours is ASAP in queue. The price will be the actual price, not the price you see in the screen. What does that mean? What? Market orders are popular amongst individual investors who wants to buy or sell a stock without delay. The advantage of using market order is that you are guaranteed to get the trade filled. In fact, it will be executed ASAP. Although the investor doesn't know the exact price at which the stock will be bought or sold, how is that possible? How do you know if ABC price at $13, you bid 13.09, you sell if you so you can't say I want to buy it at $13.99. They will just say, hey, you're in line, man. And then it might be $13.89 or $14.59. You don't douchebag. Sorry. You don't. Sorry for the delay beep. Can be 50 if it move fast? If you trade highly volatile penny stock that can go up 60% in a minute? Shoot, it's supposed to be PG-13. There's always a bid-ask spread if you're buying? Really? Let me check. You are in queue. Sorry, I said Deutsche Bank. 이런 Deutsche Bank. This Deutsche Bank. Wait, I want to check if I have money order. How do I buy here again? 이런 것도 중요하겠구나. This is very important to know, guys. But I don't know how to buy again. Guys, I forgot how to buy. Hey! 진짜. 이런 닭대가리야. This chicken brain. Wow, how can you forget how you bought stocks? 진짜 어떻게 사지? I will check it later. Anyways, let's read. Okay. So this is not. This is good for penny stock, it seems, right? This is learn together section. The teaching I skipped today. This is essential for penny stock because you don't want to miss the 60% Gaza train, the choo-choo train. So you gotta buy ASAP. But I don't think I've seen the ask price. I don't think I've seen this. Limit order. A limit order sometimes referred to as a pending order. So that's why people say for me to do pending order. Because those are easier. Right? Because I'm in Korea, so if it's hard for me to trade, then it's better to use limit order. So this type of order is used to execute a trade if the price reaches the predefinite level. The order will not be filled if the price does not reach this level. So in this context, the level means money. The price that I'm bidding at. In effect, a limit order sets the maximum or minimum price at which you are willing to buy or sell. 지정가. What's trailing stop? Penny stock trades are typically in and out in a few minutes. If you miss the start of the spike, the trade is gone. For example, if you want to buy a stock at $10, you could enter a limit order for this amount. This means that you would not pay 1 cent over $10. However, it is still possible that you could buy it for less than $10 per share specified. How? Oh, really? So if it's $9.98, it can automatically still be purchased? But doesn't go over? 인가? 뭔 소리야 이게? However, it is still possible that you could buy it for less than $10 per share specified in this order. That's legit? Oh, then that's good for me. Damn, technology. 그거를 넘기지는 않는데 그거보다 적을 수 있다고? If all the $10 are sold and people have put $9.99 ones for sale, you can get them. Damn! Really? 그러네. Sorry. There are 4 types of limit orders. Buy limit. In order to purchase a security at or below a specific price. 이게 진짜 좋다. This is really good. Limit order must be placed on the correct side of the market to ensure they will accomplish the task of improving the price. For a buy limit order, this means for a buy limit order, this means pricing the order at or below the current market bid. Sell limit. In order to sell a security at or above a specific price. So buy is at price A or lower, right? Can't spell price. A or lower, but when you sell for price B or higher. Oh, they are nice. This is nice. 좋은데? Damn. So buy stop. In order to buy a security at a price above the current market bid, a stop order to buy becomes active only after a specified price level has been reached. So you keep buying until you reach a stop. Limit is for buy and hold apparently. 그렇겠지. So if I have a buy stop at $10, then I will buy $9.91, $9.92, $9.93, etc. Buy stop are orders placed above the market and sell stops placed below the market. Okay? Once a stop level has been reached, the order will immediately convert into a market or limit order. Wait, does that make sense? 잠깐만, what? Placed above. What? Buy a security at a price above the current market bid? 뭔 소리야? Wait, I don't understand the buy stop. What? So sell stop in order to sell a security at a price below the current market ask. Like the buy stop, a stop order to sell becomes active only after. 뭔 소리야? You sell at what you set at the minimum price. Yeah, that's why I like reading these, because they don't make sense. So it's guaranteed you sell at the price. Oh, what's the difference between sell limit and sell stop? 차이가 뭐야? 시장값에서 안 돼. 나는 리밋 해야 돼. 미국 시장 갈 거면. What's 뭔 소리고? 잠깐만. Okay. It becomes active after you reach a specified price level has been reached. After a specified price level has been reached. So if it reached $10, it starts buying? 그러니까 딱 10불 됐을 때 막 사지는 거잖아. Doesn't that mean around like $10? Like if I set the buy stop at $10, once it hit $10, it keeps buying. Then don't you want to do a buy limit then buy stop? Placed above the market. 야씨, I don't. If you buy a stock at 6 and set the stop at 5, if you buy a stock at $6 and set the stop at $5.90, as soon as it hits $5.90, 저는 영상으로 안 봐요. 저는 이런 거 그냥 얘기하면서 하고 싶어요. It sells buy the stock X price at Guys, am I this dumb? 잠깐만. If you buy a stock at $6, as soon as it hits $5.90, it sells? Then you're minus. Ah! Ah! I got it! So because you don't want to lose that much. It's safety. Ah. That's smart. So that's so you don't want it to go down to like $2 like right now. Wait, I should have had buy stop. What? 잠깐만. So it's stop order. So you stop. Hey, sell. Stop. So market and limit order cost then. When deciding between a market or a limit order, investors should be aware of the added cost. Typically, the commissions are cheaper for market orders than for limit orders. So market order is cheaper? The commission! The difference in commission can be anywhere from a couple of dollars to more than $10? A commission on a market order can be boosted up to 15 when it's placed a limit restrictions on it. Because it's better technology. Hey, this is scam. Stop limit orders are also called stop loss because you're minimizing your loss as the price drives. You don't pay commissions? It's not a scam. I don't want to spend money to the broker. TD Ameritrade has good. Let's say your broker charges $7 for market order and $12 for limit order. Stock XYZ is presently trading at 50 per share and you want to buy it at $49.90. Then they put a market for $10. You play 10 shares and $50 per shares plus $7 commission. Total of that. See, there's lots of people who are like me complaining, why you commission? You know? Guys, thank those people, guys. So even though you save a little from buying the stock at lower price, you will lose it in the added cost for the order, a difference of $4. Furthermore, in the case of the limit order, it is possible that the stock doesn't fall to 49.9 or less. Thus, if it continues to rise, you may lose the opportunity to buy. Additional stock order types. There's stop loss order. I think we just mentioned about that one. A stop loss order is also referred to as a stopped market, on stop buy, or on stop sell. This is one of the most useful order. This order is different because unlike the limit and market orders, which are active as soon as they are entered, this order remains dormant until a certain price is passed, at which time it is activated as a market order. What? So this order is different because unlike the limit, which are active as soon as they are entered, this order remains dormant until a certain price is passed, at which time it is activated as a market order. So this really depends on a certain price. What? So this is not an active order. So for instance, if a stop less sell order were placed at an XYZ share for $45 per share, the order would be inactive until the price reach or drop below 45. So I want to sell. Nothing will happen until it's below 45. You might only want the order to be placed if the price hits a certain level. Oh. The order would then be transformed into a market order and the share would be sold at the best available price. So they don't touch the share until it goes below 45. And they're like, holy shizzle, we gotta pay. And then it just becomes into a market order. This is the best then. Oh, really? You should consider using this type of order if you don't have time to watch the market continuously but need protection from the large downs. I should have used this. A good time to use a stop order is before you leave on vacation. Why didn't you guys tell me? I lost $50.70. Irori. Joking. Stop limit order. These are similar to stop loss order, but as their name states, there is a limit on the price at which they will execute. There are two prices specified in a stop limit order. The stop price, which will convert the order to a sell order, and the limit price. So this is kind of similar. There's a limit. Instead of the order becoming a market order to sell, the sell order becomes a limit order that will only execute at the limit price or better. This can mitigate a potential problem with stop loss orders, which can be triggered during a flash crash when prices plummet but subsequently recover. You wanted to trade and we said it's a selling signal, so wait. Shh. You didn't lose anything until you hit 3k in loss or sell? Oh, really? These are useful if you're trading a stock. If long-term investment, not so much. That's true. So for the previous example, you set the stop price at 45, then a limit price at 44. This is like confusing. So the order doesn't become active till it hits 45 or lower. But then when you hit 44, but then when you hit 45, it starts becoming a market order. And then at 44, it becomes a limit order. Wait, Jinri's brain come back. Jinri's mind come back. Come back inside to your brain. And it becomes a sell limit with the lowest price you are willing to sell at so at 45, before 45 it's dead. It's zombie. Oh, it's 뭐냐? It's sleeping. And then at 45 it wakes up being like holy shizzle. And then at 44 and it's trying to sell until it's 44. Right? 그런 거야? Ah. And this is all done by the app. I wonder what they did. So it just wakes the stock up at 45. So this one is wake up call. This one is sell your sell your wait, what do they have? Exclamation point, 골뱅이, 이렇게? Now, all or none. This type of order is especially important for those who buy penny stocks. An all or none order ensures that you get either the entire quantity of stocks you requested or none at all. This is typically problematic when a stock is very illiquid or a limit is placed on the order. For example, if you put in an order to buy 2,000 shares of XYZ, but only 1,000 are being sold, an all or none restriction means your order will not be filled until there are at least 2,000 shares available at your preferred price. This if you put 2,000, if you buy 2,000 but only 1,000 are being sold. Why am I so you wait until you can buy all 2,000. So this is betting. It's all or not. 이거 betting 아니야? Isn't this type of betting? Oh. So if you don't place an all or none restriction, your 2,000 share will be partially filled with 1,000 for one price. And like, oh, not really. But you know, this is me envisioning like, you know, you have the chips and you just pull all in. I don't know. That's what I was thinking. But you want 2,000. No matter what, you want 2,000. Not anything less. There's so many terms. And then, immediate or cancel. An IOC order mandates that whatever amount of an order that can be executed in the market in a very short time span, often just a few seconds or less, be filled, and then the rest of the order canceled. If no shares are traded in that immediate interval, then the order is canceled completely. So now you can have a time span. You can set a time span. Time. You can set time in it. Why use big fancy words, you know? So just avoids the hassle of getting partially filled orders. People don't like partially filled orders? A penny stock might have zero volume at certain times. You ever win a big at poker or stocks? Can you buy 23090s and loan them to me? I have to buy Tesla first, Finny. For me, Tesla comes first. Don't want others to know how much about stock trades. What? Why? Hey, but Tesla first. Fill or kill? Fuck. This is Folk method. This type of order combines an AON. What the hell is that? Oh, all or none with IOC specification. Folk. This is not swearing, guys. In other words, it mandates that the entire order be traded in a very short time period or it's canceled. This is like... You have to say this with this tone though. Why not lucid first? Shh. Good till canceled. This is a time restriction that you can place a different order. A good till or cancelled order will remain active until you decide to cancel it. Brokerage will typically limit the maximum time you can keep an order open to 90 days. Oh, this is another time span, but until I cancel. So I will keep this continuing until I cancel it. That would be the most useful for penny stock. The folk one, there are also different order that TOS have like order spread. Wow, that's too advanced for me. Who trades penny stock now? Mr. Pirate? The guy over there in the UK? Day. If you don't have a specific time frame of expiry through the GTC instruction, then the order will typically be set as a day order. This means that after the end of the day, the order will expire. So I have to set this for unlimited unless it's just for a day order. If it isn't transacted, then you will have to re-enter it if in the following day. So that's why you can use this one. Take profit. A take profit order, sometimes called a profit target, is intended to close out the trade at a profit once it has reached a certain level. Execution of a take profit order closes the position. This type of order is always connected to an open position of pending order. Not all brokerage or online trading platform allow for all these type of orders. Check with your broker if you do not have access to a particular order type that you wish to use. The bottom line. Wow! Whoosh! Knowing the difference between a limit and a market order is fundamental to individual investing. There are times where one or the other will be more appropriate, and the order type is also influenced by your investment approach. A long-term investor is more likely to go with market order because it is cheaper and the investment decision is based on fundamentals that will play out over months and years. So the current market order is less of an issue. A trader, so I'm a long-term investor. That's my title, guys. However, is looking to act on a short-term trend in the charts and therefore is much more conscious about the market price paid. So this is like, trader is like penny order, right? 이거는 penny장. In which case, a limit order to buy in with a stop loss order to sell is usually the bare minimum for setting up a trade. By knowing what each order does and how each one might affect your trading, you can identify which order suits your investment needs, save your time, reduces your risk, and most importantly, save your money. Thank you. Sounds like some type of speech. But that's money order, guys. I didn't know there was that many orders. So actually, a lot of these stock order types are used more for like day traders or like short-term traders, but I feel like long-term uses this. I think personally for me, I will do mostly of limit orders. Right? And other than that, I think that's all. So good luck on trading, guys. And that's all for money order.